And today is Tuesday, the 28th. A little bit of green on the screen today. We had SPY up about 1/4%. SPY was up 1/10%. Qs were up 1/4%, and the small caps underperformed by 40 basis points. A little bit more lagging there in the small caps. Bonds were up today. They shook off that third big bond auction of the week. That's something that the last couple times that we've had 3 bond auctions in a week, and I'm referring to the longer duration bonds, so at least 2 years, 5 years, 7, which is what we got this week. But previously we've gotten I think the 5, the 10 and the 20 or something like that. And that last bond auction causes some issues. So there's a little bit of that today around 1 o'clock today, but overall didn't really derail the move there in bonds. Still up for the day, but really where the big moves were today in not so much those regular indices, but more in the gold miners, silver. Those all did pretty well today. And then you had some nice moves in things like the retail group. So also, which I want to kind of cover in this video, a lot of it feels like possibly I don't want to say the last leg up in this move, but it feels like we're starting to see some big short squeezes, which has historically, when I say historically, just over the last year or so, when the market is moving up, it seems like the names that really go the last, like the big names with high short interest, it kind of marks that point where the rally is getting quite mature. So I don't know that for a fact. I think I've got some levels for you to watch. So when we look at the S&P chart, you can see that we're kind of pausing, or we've kind of been pausing here for the last week. Remember, we've had 4 weeks where we've been very strong and we've had gains both in the S&P and in the Qs, right? 4 consecutive weeks of gains. And since that's happened, back on 10/31, when price got over that 5-period moving average, price hasn't really looked back. We've stayed above this 5-period moving average, and that's why I have the 5-period moving average on my chart, is because it could really kind of give you a sense when something is changing. And even if you just use that indicator alone, obviously I look at volume at price and some other things are on my charts, but if you just looked at the 5-period moving average, right, and said, hey, I'm going to stay long as price and the indices are above the 5-period moving average, that has lasted about a month. Right. So that's an exceptionally long time for that to happen, but it is what it is. That has happened. When we look at the 1-hour chart, this is just S&P. One thing to note here is that basically since the beginning of last week, we've just basically been going sideways. Now we've tested the range to the downside, and again, this is a very tight range for this week. But we've tested the lower side. We've tested the upper side. Right now, price just doesn't want to move out of this range for now. We could look at the Qs too. So I mentioned I would give you some levels, and these are the same levels that I think I gave you in yesterday's video. But 455.63, it's got to decisively break there. Notice we did that intraday. We had this one candle close above the value area, the next candle decisively down, and just showing that we don't want to go anywhere yet, right? And that's the level to the upside, 455.63. The level to the downside is 453. What about the Qs? Right, the Qs, same thing. A little bit of a lower high from yesterday, but I wouldn't get too worried about that because it's not. I mean, we're really splitting hairs at this point. Really the level to watch is 391.20. Same thing last couple weeks, right? The high point was basically back in the beginning of last week, and we're just consolidating here. So the question is, what is going to break us out of this consolidation? Now, there's a couple things to realize here. Number one, we do have some more economics this week. I don't personally, you could disagree with me. That's fine. I don't really care too much about the GDP, right? I guess it's great to talk about at cocktail parties about what the GDP is doing. But if you've taken a macroeconomics class in college, you know that they group these, they do cover some of the economics that come out, right? And there's leading, there's coincident, and there's lagging indicators. GDP is a lagging indicator. It's going to tell you what happened in the rearview mirror. It's not really, I don't think, unless it's really out of line. It's, because again, some of the Fed speakers will talk about it. I think there was a Fed speaker who talked about the GDP today. That's great. But for me, I don't think it really matters too much. And keep in mind, stock prices are also in that leading indicator. What is going to be more important, I think, and again, there's also things like personal consumption tomorrow too, which could be important. But I think whether or not this number stays down, right? The PCE deflator, which is another gauge of inflation. I know I mentioned this in yesterday's video, so I'm repeating it, but I would watch that. Maybe that's what takes us out. The other thing I mentioned I would bring up another point. If you notice what's happening too, I put this tweet out last night because people still think that, or they're still making this nonsense up about, well, it's not nonsense, but when we look at the Qs or SPY, it's a market cap weighted index. So yes, by default of how a market cap weighted index works, the top names in the index will drive a lot of the performance, especially if they're skewed a little bit to the upside. So that's what we have, right? And people like to call them the Magnificent Seven or whatever, right? How they're responsible for a good portion of the index's gains this year. That's absolutely true. Why is that true? Because the biggest names in a market cap weighted index will always drive the performance of the index, right? They just happen to all be doing really well this year, right? There's nothing wrong with that. I hate to break it to those people that are like, oh my God, if it's not for these 7 stocks, right? The rest of the stocks are a hodgepodge, right? The names that are lower weights, there's some that have gone down and there's some that have gone up, right? But it's not to say that there's not outperformance outside of those 7 names. For example, right, Royal Caribbean is up 115% year to date. So why don't they mention that as one of the biggest movers, or one of the how it's affecting the overall S&P? They don't, because Royal Caribbean is less than 1%, is like a 10th percent in the S&P 500. So even though it's up 115%, it can't move the index. Now, it can become a larger weight going forward, but not by leaps and bounds, right? So even though Royal Caribbean is up 115% year to date, one of the best performers in the S&P 500 this year, it is only going to move it by 15 basis points by the S&P. So it just can't do it, right? But it's not to say that there's no other performers outside of those 7 stocks. That's ridiculous, right? But please, if you don't want, and here's the thing, if you don't like that, the mechanics that go on in the S&P, you could actively manage your own portfolio so that you could take some of that bias out, right? It's very simple. It's not to say, like, to make these major statements that there's something wrong with the index, right? It's doing everything that it should be doing. Now, here's the point. Sorry, long-winded response. But if those 7 names are in consolidation mode for the time being, and they may very well be, then the indices are not going to move that much, right? That doesn't mean that there's other things that aren't moving. But for now, right, so let's go through some of these names really quick. Apple, we know that this has taken out an upside VPOC, so target has been realized, right? We're kind of coming in a little bit. It's probably going to pause and consolidate a little bit if I had to guess. I'm not making a prediction. Microsoft, right? Well, Microsoft had another record day, but at some point, this is also going to consolidate a little bit and maybe perhaps settle down, right? That's just logical after a big move. I'm not predicting the top in Microsoft. I'm just saying it's probably due for a little bit of consolidation. Google, another name, right? This is also consolidating a little bit, right? Notice that it has almost moved up to the top of value here, right? There's something else that Google hit too, but it does look like this is another one that's in kind of the consolidation camp a little bit, right? Notice it did not make a higher high here, by the way, right? Netflix, right? Now, this is not a huge weight, but this has also started to consolidate a little bit after a big run, right? What else do we have? Meta, right? Same thing with, now Meta had a nice rebound today, actually a pretty nice bullish engulfing, but this is also a little bit, going, consolidating a little bit, right? And Tesla, which I want to talk about too in this video, had a nice day today. But the point being is it's okay for some of those names to consolidate a little bit. They've had a big run. So it doesn't strike me as surprising that the indices are going sideways, because when you dig into those bigger names that do move around the performance because it's a market cap weighted index, it doesn't strike me as surprising that these things aren't moving. Now, very interesting, the move in Tesla. I have not been loving the Tesla price action lately because it's been underperforming everything, right? And it's been the underperformer in that group, but it could play a little bit of a catch-up move. It also has an event tomorrow. Names love to move into events. So I am long. I did get long Tesla today on the break of the value area. And I've taken some targets along the way because I don't like to sit with names that look like this, because I think that this is nice for a trade, but I don't know if this is still in the pattern of lower highs. Look at the difference, by the way, right? Here's the cues, right? Lower high, lower high, lower high. Move up to those previous highs and break out, right? Tesla has not done that, right? And that's called relative underperformance. So I will stay in a trade for a little while, but I think when you have an event like the Cybertruck or whatever, right? Tesla and other names, they love to run into events, and then it's often, this is a saying that you hear me say in a lot of these videos, it's often buy the rumor and sell the news. And I kind of think that that's what's going to be too for the cyber event. Maybe I hold up, the last 10% of the position, but I will not be holding a decent position into their event. All right. But for now, I'm long this name as a catch up trade. Other things that are kind of catching up. How can we not talk about a firm, right? This is one of our bullish setups over the weekend. It is not even stopped at the Virgin point of control takeout here. So if it can kind of hang in here, right, this is great performance and a really good looking chart, which is what we talked about on Friday when we went over this bullish setup. But nice breakout here. And it has triggered. This is the bullish 80% rule. I don't know if it's going to go to 44, right? That's a big move. So you have to kind of, manage your risk until then. But this is a really nice looking move. Now, you can look at some other names that are kind of playing a little bit of catch up. And again, like Square, for example, up 5% today. That's not going to move the indexes because it's not a big proportion of them. So you're starting to see this other, catch up move. PayPal starting to move. I know there's been a lot of call positioning in this one, right? I actually took on a small like dumpster. This for me is a dumpster dive trade, right? To go long PayPal because I don't like going names that are in downtrend, long in downtrends, but you're starting to see some of these things squeeze. Look at what's going on with GameStop and with AM. GameStop was up 13% today, right? Again, not going to move the index. Look at what GameStop is doing after hours. It's up another dollar. So these things are squeezing. Look at AMC, right? Is also up after hours. Now it's cooled down a little bit, but you just kind of feel like this may be again, I don't want to say the last leg of the recent move, but you're getting kind of sorry to use this term, but you're getting more of the crap stocks, like a Wayfair, high short interest name. Hedge funds are kind of caught here a little bit, and they're forced to cover, and that can cause some of the moves here. So again, I'm not predicting. I'm just saying that we've seen this before, and that when these stocks really get going like this, it can sometimes mark the kind of the mature end of a move. Now, again, we go back to the S&P here for just a minute. I'm not saying that we top out for the year or anything like that, but maybe we're just in a little bit we might pause a little bit after one heck of a move this year, right? Coin, by the way, is another name with decent short interest. Look at look at this move that we've seen. So really nice if you've caught some of these moves. Congratulations. That's very nice. Just to hit on a couple names from yesterday, we talked about Zscaler, right? Which fell, I thought, just because the bar was set high. Look at what Zscaler has done, right? All the way back, right? So there, for now, is still like, there's the buy the dip mentality too that's going on. CrowdStrike, not that bad of a reaction. Notice the dip has been bought, after this name has gone up a lot. So, I would say overall, like by kind of end of video thought or end of day thought is, just be mindful of your risk as always with trades. Like I took off a couple trades today that just weren't really doing much. I had a couple home builders on. I took them off just for like risk management purposes, right? And this way, what I said to some of my members at the end of the day was, you want to be, especially after the move that we've had, you want to be to be on your toes in terms of if we do have some type of a little bit of a dip, right? You want to be on offense, not on defense. So it's always important, not just today, but it's always important to go through your open positions, see if they're still working for you. I always talk about famous traders, and Paul Tudor Jones is one of those that comes to mind. One of his sayings, and he's one of the best traders out there. One of his sayings, and there's many of his sayings that I like. One of them is losers don't average losers, right? Another one that I like is in his portfolio, he always assumes that everything that he's holding is wrong, right? He's always worried about his risk. He's a risk manager, right? Not one of these people, who think, oh my God, we're going to the moon in all these stocks, right? So go through, and see if your positions are working for you, or if you're just holding them just because you want to be right. Right. So it's a good exercise to go through. And like I said, if you end up cutting a couple positions, right, you can kind of go after names that might be dipping and might provide, um, setups on a little bit of a dip, because that's what I'm doing now in some positions too. All right, guys, we'll talk more about that in tomorrow's pre-market session for members. Have a great night, everybody. See you tomorrow.